All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for January 16th, 2024. We'll start with the hybrid swing workshop, 30-minute charts, beginning with Alcoa. Big gap down, continued to fail. So the new low of the day, an hour in, we get the short. Standard risk in Alcoa moves directionally until 3. Starts to reverse. We take the exit at the skin of the dragon for 4R. AI, same trade, 1R. I've added the Aussie dollar, US dollar pair, and this one is a collapsing dragon and a continuation of the 5-day move. And that one gave us just about an R. Caterpillar, continuation, collapsing dragon for an R. Cliff. This is a Kata 2 pattern because we haven't broken through the belly of the dragon or the belly of the RL10, and that just generally slid like the rest of the market did for an R. No overnight risk on any of these. CVS was an SSC that gave us half an R on an upward grind. I've added the Dow. This is a collapsing dragon against the belly of the RL10. And on broad market weakness, this gave us 2R with a exit at the skin of the dragon after the R10 reverses. It's important to remember, you got to wait for that R10 to shift the slope so that you don't get out prematurely. This is Disney. So we got an emerging dragon, and really a Kata 2 entry that was also an emerging dragon, and then about a 4R battle drill added the second position, and it continued just to run amok north. So this ended up around 10R for the day, and I'm going to hold that one and continue because it's up here going to test the next high at 94, so there's still some room to run on Disney. So that was a pretty nice looking trade right there. This is an example of the importance of knowing where you are in the 10-day and 30-day range. We talked about that extensively last night during the small group coaching. So this right here is our 30-day range. You know, there's the 30-day low, and there's our 30-day high. So that black box establishes the 30-day frame. And then the blue box represents the 10-day frame. And when it made that low down here and then held support, well, that was a sign that both the fast swing traders and the slow swing traders were committed to that as a support level. So now if you take just the midpoint, then the move is to here, and you get that with the Kata 2. You get the first leg up and then hold support, and now the second leg up is what we got today. So there's still this much room to 95 on the 30-day look back, and we're pretty close to the 10-day high here, right at it on the shorter term swing. So this will be an interesting test case tomorrow. Is there another leg up to satisfy the guys who bought up here and then suffered all the way down? Is there one more leg up, or does it start to reverse? If it starts to reverse, then we would look at this region here as the entry, the midpoint, and the bottom of that range. So now we have some measured price levels to compare the movement of price against. But the point of this is to say that the intraday move, which went from here, Kata 2 entry, and then ran all the way up to here for a 10R trade, after it gets through this resistance levels and this resistance level, We can use those key turning points to figure out where the key price levels are and to estimate the return of reward and risk. And we're still in the early days of MACD four seasons. So if you're an intraday trader, whether you're on 3-minute or 30 days, you want to know where yesterday's high and low were, as breakouts from there become significant. And you want to know where I think the 5-day and the 10-day limits are. See, this used to be the 5-day high here, and it broke all the way through that. And then you want to know where the 30 days highs and lows are as reference points for the short-term trading channels. And then you can use the size of these standard risks that we pick for each symbol and then express the width of the channel in terms of how many chunks or how many bricks, how many building blocks. And then you can use that to estimate your reward to risk ratio minimums to determine if that's tradable. Good long discussion of that one in the video I uploaded last night. Devon Energy. This was a continuation short. So here's the primary trend, which closed there last Friday, then gapped down here and started selling off. So that's a no-brainer. There's no resistance, no support, I mean. So standard risk, it sells off and then just, as long as this stays under the VWAP, then everything is okay. There's a lid. The VWAP acts like a lid to keep pushing this thing down. And then after the R10 reverses, we're running out of time during the day for it to make another leg down. So we just take the exit at the skin of the dragon and we're able to cash 4R. It's very hydraulic in that sense. Emerging markets, huge gap down. And I say this all the time. You got to really watch there's the close, there's the open. Which way is it going to go? It starts voting down. So we're short, standard risk. And then I don't want to hold that overnight, so I'll just take the 2R and go home. The bigger the gap, the more I like to trade that one intraday. ETHE, 1, 2, 3 entry mid-morning after the R10 reverses and hits the dragon. I'm in with 1, 2, 3. It closes very well. I'm going to hold that position overnight because I believe that it can get back to here or to here or to here. Those price levels are my upside targets, target 1, target 2, and then the 10 and 30-day high, target 3. If it fails, then I'm going to bail probably when it hits the top of the dragon or the belly of the dragon, but not later than the rising PSAR. So I've got 3 candidates for where to get out of this trade if it starts to fail. If it breaks up north of this, I could probably add a second position right there because I will have a nice cushion. Mexico, routine gap down short for half an hour. Brazil, same trade, but for 3R, it moved more. Intel, basically a scratch. IP. So this one was a gap down and then started a runaway move all the way down here and then started to recover and then started to fail again. So we just took it to take an R, tried the breakout, gave back half an R, and then I just stayed away. So total net on this one was plus 0.5. There's a lot of movement for not much gain. Real estate, half an hour on the collapsing dragon. Coke, we exited the long. when this gapped up and then started to fail. So it got out of that this morning. Then it continued to fail for the next 90 minutes. Then went through the PSAR. So we took the short with the standard risk and then netted one. But I think there's more room to the downside on that one tomorrow. I think it can come over. And if we get market weakness, it'll test those two price levels. So I wanted to be exposed for a gap down move. And I have this much, about 1R in the bank as a cushion as we wait and see if this is going to rise or fall. McDonald's 1-2-3 entry for a scratch. I'm sorry, that's KRE. This is McDonald's. This was a 1-2-3 short. Collapsing dragon. PSAR is already flipped. Dragon rolled over. RL30 rolled over. So that's an owl entry. Everything's pointing to down. And when I take that trade, I'm looking to get to the bottom of the dragon here. Sorry, bottom of the dragon here, or bottom of the RL10 there. So those are the two targets, and it fell through that. And then as it starts to reverse, and the R10 reverses, here's the dragon skin coming down. You just take that exit right there. And on that much risk, you get basically 3R. Routine. Merck, no trade. Microsoft closed the long for about 8R once it peaked and rolled over. So the R10 rolls over, the VWAP starts declining. That's enough. Marijuana. It was a big gap up and go. Jay, support and resistance. Where am I drawing the line every time to show where it can potentially move? To the turning points in the R10 and the belly of the dragon. Plus, we know that the maximum size of a move during the day is the range stat. That's on the daily chart. So if I know where the high of the day is, I can drop a range stat. I'm not looking at Fibonacci levels. I didn't say that. You've never heard me use those words. So the range stat is the maximum reasonable intraday move. And we look for places where support and resistance have been established. And so if this starts failing, I'm not surprised if it moves that far down to here. That's where the target is. That's all I do. You see that on every trade every night. Nike, big gap down, continues to fail. Short, standard risk. It makes a low down here, and we're holding about 5R. And that gives me plenty of cushion. And the reason I'm going to hold that overnight is because this support level, which tried to hold here, could not, and it failed all the way down here. That's an extra bit of failure. So there's no support in sight. So that means this thing has a chance to keep failing. So I want to hold that because I'm hoping to see another big gap down overnight in the same way that it gapped here. That would be the least surprising move. So I've got 5R in hand as a cushion and reasons to want to hold it overnight. NVIDIA. Gap up. So the gap up, here's the close, gaps to here and then takes off. It cleared the PSAR flip in the top of the RL10. So that's a very positive sign. So we buy it, standard risk, and it takes off. At this point, when the R10 rolls over, I should be looking at taking the exit along the skin of the dragon. I had a couple 3R in hand, so I wanted to give it a little more room. It's NVIDIA. It was the strongest symbol in our stack. So I elected to hold it. It stabilized here, so we're holding finally about 3R on today's percent winner. One of the few things today that was in the green. and I've got 3R of market's money as a cushion. And then if it breaks above this R10, then I'll add a position tomorrow. Otherwise, I'll exit. Clean energy. Continuation short, one position, holding 2R overnight. Rivian, no trade. S&P, mostly down. It was kind of volatile, but mostly down today on the first day of the week. Treasuries, big gap down. So here's where it closed. Big gap down to here. And that was below the support level. So that means there's no support in sight. And then after 90 minutes, when that little range breaks out to the downside, I'm short, standard risk. It sells off. It starts finding support. That support is enough to turn the RL10 positive. So now I want to exit somewhere in here at the lower skin of the dragon, which is where we exit, no overnight risk. So on 1 unit of risk, we earn about 3R. Tesla tried a support and spring crossing on the PSAR flip. It ran up initially, so that filled me with optimism, but it only got as high as the descending Bollinger Band mean, and that acted as a barrier, and then it rolled back. And then when it fell through, I ended up taking half an hour loss. I was willing to give it a little more room, but that caused me to lose half an hour. Could have exited. I had a full hour to exit along the scratch line, but it ended up taking half an hour loss. Walmart. The entry from last week paid off today. It peaked. The R10 rolled over. I took the exit at the skin of the dragon, and that gives us about 2R from our entry. US Steel, just part of the long slide, finally got back into it, picked up an R, and then after it rolled over, I did not want to hold that overnight, so we just collected an R. Let's look at the traders. Ahmad minus 2R in the chop here of the Aussie dollar. The first breakout from that Aussie dollar happened right about here. And there was still a little bit of room left, but I think he'd already written it off that one. Basically a scratch on a couple trades here inside the euro. Tesla brings home 3R with the early gap down and reversal. Gets paid, and then a great exit at the skin of the dragon. A couple more where he's grinding along. So he gets what is available for about 3R. There was more available here early, but probably committed to Tesla and probably a span of control. I like the second entry after the COTA 2 and then the re-entry. So we were willing to keep taking the shots. There just wasn't much available in this one today. Maybe traded too long in the grind here. Alcoa, slow getting in, but did pick up this first leg. There's a couple more re-entry points that would have paid off a little better, I think. So I think we missed the grinding move. Cliff, yeah, here was a moment on the PSAR flip and the rollover available in here. We got maybe the second part of that move because we're late into the winter when we finally get that. So if you watch that MACD somewhere around here, we should be thinking about getting short. George does a nice job collecting some cash here for 0.9R in Microsoft. preserve most of that good move. A good job on these two measured trades inside EWZ. He's quick to exploit the opportunity and locks it in. I think this was a little late getting back in, to be honest, but you did a nice job protecting against the adverse move. Kevin, there was an earlier entries available in here in EWW, but you had about 4 trades inside the chop, and it shows in the results. So that's the least favorable time of day to be trading EWW. This is probably the first really good signal that was there after that initial panic sell. This was probably the first really good entry. You could make an argument there's an entry in here that you have a lower high and it is rejecting at the VWAP. So maybe there's an entry short, but you got to use the top of the PSAR flip as your exit. Otherwise, you're going to get chopped out. Those stops look a little tight to me, to be honest. Satya on AMD crushing it early, and often the good re-entry when it doesn't pan out, quick cut and then stays out of the chop, netting 3.7. Nice work. Looking at the daily report, we are still in bullish quiet, mostly oversold long-term, or overbought long-term, I should say. Some give back today, setting up a buy on dip opportunity. Volatility is flashing some warning signs about potential downside volatility. Concur, be ready. We've had, today was a day it could have continued last week's gains, but it didn't. So there's some weakness creeping in. A mix of breakouts and breakdowns. Breakdowns in Devon and Boeing and Chevron in the energy sector, and then breakouts for IBM, NVIDIA, and Travelers. I really like NVIDIA right here. So that's on my short list. Among the ETFs, mostly weakness. The only strength at all was in marijuana. That's so narrowly focused. This was a negative day for the market, sum total. Lots of auto framers because of the relative small volatility and the distance from the 10-day high. So there's some good names in here. Intel, Tesla, catch my eye right away. JP Morgan and the Russell really catching my eye. Only a couple squeezes, Procter and Walgreens. Being dominated by the fall and the winter with today's selling pressure. And the multi-day NDX is really showing you just how today was a bloodletting for the majority of the symbols today on both sides, ETFs and the Dow. What little strength there is, IBM, Microsoft, Walmart, Oracle, there's some strength in the tech. And yeah, so we're at a very crucial test location right here. It's testing. Today was not a persuasive move to the upside, which now means coming down to test the lower skin of the river is a real possibility. So we'll see what tomorrow shakes up. All right, that's everything for today. We'll get it published and posted, and you should really listen to the video I posted on Patreon last night. That was the small group coaching session. It was about 2.5 hours. It had some foundational material and very deep insights into swing trading and hybrid trading. It's well worth your attention. We're just starting that project, so that's going to be a long-term work in progress for us. So hats off to the guys doing the work. Take good care, fellas, and we shall see you tomorrow.